capital in capitalism. Make money work for me. Assets is the happiness of our family. High alert zones. Retracement levels, ready dealers for financial specialists of a potential pattern inversion, opposition region, or backing zone. Retracements depend on the earlier move. A skip is relied upon to follow a bit of an earlier decay, while an amendment is required to remember a part of the earlier development. When a pullback begins, chartists can distinguish explicit Fibonacci retracement levels for checking. As the amendment moves toward these retracements, chartists should wake up for a possible bullish inversion. Diagram 1 shows Tesla backtracking around half of its earlier development. The backward applies to a bob or remedial development after a decay. When a skip starts, chartists recognize explicit Fibonacci retracement levels for observing. As the revision moves toward these retracements, chartists should perk up for an expected bearish inversion. Diagram 2 shows Apple following around half of its earlier decrease. Remember that these retracement levels are not hard inversion focuses. All things being equal, they fill in as ready zones for a possible inversion. It is now that merchants should utilize different parts of the specialized investigation to recognize or affirm an inversion. These may incorporate candles, value designs, energy oscillators, or moving midpoints. Basic retracements. The Fibonacci retracement tools at stock charts show 4 basic retracements: 23.6%, 38.2%, half, and 61.8%. From the Fibonacci segment above, unmistakably 23.6%, 38.2%, and 61.8% come from proportions found inside the Fibonacci arrangement. The half retracement did not depend on a Fibonacci number. All things considered, this number stems from Dow theory's declaration that the averages frequently follow a large portion of their earlier move. In light of profundity, we can believe a 23.6% retracement to be moderately shallow. Such retracements would be proper for banners or short pullbacks. Retracements in 38.2% to half reach would be viewed as moderate, despite the fact that more profound, the 61.8% retracement, can be alluded to as the brilliant retracement. It is, all things considered, in light of the golden ratio. Shallow retracements happen. However, getting these requires a closer watch and a snappier trigger finger. The models underneath utilize everyday diagrams covering 3 to 9 months. The spotlight will be on moderate retracements, 38.2 to half, and brilliant retracements, 61.8%. Likewise, these models will tell the best way to join retracements with different markers to affirm an inversion. Moderate retracements. Diagram 3 shows Target, Amazon, with an amendment that backtracked 38% of the earlier development. This decrease likewise framed a falling wedge, which is common for restorative moves. The mix raised the inversion alert. Check-in money flow returned positive as the stock flooded in late June. However, this first inversion endeavor fizzled. Indeed, there will be disappointments. The second inversion in mid-July was fruitful. Notice that Amazon gapped up, broke the wedge pattern line, and check-in money flow turned positive, green line. Diagram 4 shows PetSmart, PETM, with a moderate 38% retracement and different signs meeting up. In the wake of declining in September to October, the stock bobbed back to around 28 in November, notwithstanding the 38% retracement. Notice that rect helped transformed into obstruction here. The mixed filled in as an alarm for likely inversion. Williams %R was exchanging above 20% and overbought too. Ensuing signs confirmed the inversion. To begin with, Williams %R moved back beneath to 20%. Second, PETAIM framed a rising banner and broke the banner help with a sharp decay the second 7th-day stretch of December. Golden retracement. Diagram 4 shows Pfizer, BTC, lining close to the 62% retracement level. Preceding this fruitful bob, there was a bombed skip to the half retracement. The fruitful inversion happened with a mallet on high volume and finish a breakout a couple of days after the fact. Graph 5 shows JP Morgan, BTC, beating close to the 62% retracement level. The flood to the 62% retracement was very solid. However, resistance unexpectedly showed up with an inversion affirmation coming from MACD. The blue candle and hold down insisted obstruction close to the 62% retracement. There was few-day ricochet back above line, yet this skip immediately bombed as MACD moved beneath its sign line. What we conclude. After the entire discussion, we have come to the conclusion that Fibonacci retracements are useful for the identification of the end of a correction and a countertrend bounce. Usually, retrace of the prior moves are driven the corrections and countertrend bounces. Mostly, when short 23.6% retracements occur, the 38.2 to 61.8% zones covers the largest portion of the possibilities, with 50% in the middle. You may see this zone as big, but it is just a reversal alert zone. So you would need other technical signals to be assured of reversal. Moreover, you may use the candlesticks, momentum indicators, volume, or chart patterns to confirm the reversals. Okay, finished.